Hey everyone, this is Vishal from Uncharted FX, and I wanted to do this quick video here. This is I'm recording this Sunday evening, Pacific Coast, West Coast time, and there's some interesting charts here. I've been looking at the weekly charts. A lot of these currency pairs have very interesting levels, especially the Scandinavian currencies here. So the US Swedish krona, the Euro Swedish krona, Euro Norwegian krona, US Norwegian krona, all at very key weekly levels. Pound, Canadian dollar, Aussie yen. So there's a lot of very big weekly levels that you should have on watch for this week. But I think the important chart that I want to cover is copper. And copper is also at a very interesting level here. You can sort of see a head and shoulder pattern here, and even a head and shoulder within a head and shoulder. However, I would not call this a head and shoulder because again, a head and shoulder has to occur at a top or a bottom. You can sort of say that there's a very long-term head and shoulders after an uptrend here. And a lot of people are looking at the break here, and I think this is interesting to look at just because this is how markets move. If you do my course, you will understand this, where we look for higher lows, higher highs, higher lows, higher highs, and we look for at least two of these swings. We call them swings or waves, and we had two, and we've yet to make our first pretty much lower high on the weekly chart, because again, a lower high is defined by a lower low. So we could be making our first one here, and you know, copper is at a very interesting level, I believe. And copper is known as Dr. Copper. It's usually used to gauge the health of the world economy, because copper is used in a lot of infrastructure projects, right? You know, whenever you're building homes, bridges, all that kind of stuff. Mostly homes, right? And if you've read my long-term outlook on top investments, if you believe in the green energy, alt energy, you know, clean energy, that boom that's going to come up, whether it's paid by the government, copper is the metal. It is the green metal that you want to look at, because a lot of these solar panels and wind generators require a lot of copper as well. But not only that, again, when you're building infrastructure, copper is required for all of that. So if that still continues in the long term, you know, that's a reason to be bullish copper. However, if you follow my work, you know I believe we are heading towards some sort of recession or a slowdown. One other thing you can look at if you want to find other signs of a recession is, of course, you look at the bond market. The entire yield is pretty much inverted. However, this is the one that's not inverted yet, the 2 and the 10-year, and you know, we're below like, you know, 8-9 spread points. So this is something to watch. I think we will see this invert very shortly, and when this happens, the mainstream media cannot deny this yield curve inversion anymore. So you know, the cat's out of the bag. They won't be able to contain this. So this is something to watch for. I've had posts about this before, but whenever there's a yield inversion, generally 7 out of 10 times it's called a recession. It has called a recession, so it's a very good indicator. Of course, we also look at PMI, which is the Purchaser Managers Index, which tells you what's about to happen rather than the CPI. CPI is as the inflation numbers. So generally, you know, you're taught, oh yeah, you know, if inflation's high, the economy is doing well because people are spending, blah, blah, blah. But really, it is the PMI which matters, because the CPI tells you what's already happened, whereas the PMI tells you what's about to happen or what's coming forth. So again, you know, using the analogy of driving in a car, when you look through your rear view mirror, that's the CPI. When you look through the front of your windshield, seeing what's ahead of you, that's PMI. So we've seen some negative PMIs come in. You're seeing central banks cut interest rates, but you know, if you follow my work again, they're trying to keep the confidence in the system, so they have to tell you that the economy is strong and we're cutting rates due to you know, small things. You know, even the Fed saying it's a one and done. We just saw New Zealand cut rates by 50 basis points, and I think that spooked everyone, because it is a race to the bottom to see who can devalue their currency, and you might see things increase there. And you're hearing a lot about the retail apocalypse. A lot of retail jobs and retail stores are closing down. They say it's because of online, but we're not really seeing an increase in spending to make up for that. So the spending that's lost in the retail sector is not really adding up to the online sector. So something to watch for there. Again, people are tapped out. They need more debt. You have to bring interest rates lower. And a lot of other people also talk about oil. So let's go here on the daily chart. If you follow the market sniper and reset sniper, Francis Hunt, he has some good videos that have come out lately about the coming reset, and the economic slowdown that is happening. Of course, oil will be affected because oil is it's a lifeblood of the economy, right? If you're shipping things, people are driving and shipping goods and stuff. If the economy's strong, oil should be going up. However, now I think oil has a lot to do with geopolitics. But, watch this chart for oil as well. This could be indicating a recession signal as well. But I think, again, number one, it's the yield inversion and what we're seeing central banks do. But this copper chart, again, Dr. Copper, that's what it's traditionally called. Let's see what we'll do here. You can see here we've had on the daily chart, we have this big prolonged move down. We're seeing perhaps price bears start to come in here. If we do a fib here, that's probably the 38.2, I'm assuming. Around that. Yeah, 38.2. So let's see what happens here. Again, I would like to see this big break on the weekly chart. Very important level, but this could be telling us that we're seeing some sort of slowdown. And of course, if we go into the arena of geopolitics with the US-China trade war, that will definitely slow things down, tariffs and all that kind of stuff. So that could be another catalyst for this copper price to break down, because we are hearing a lot of things about China too. I mean, their CPI did come out as expected, but honestly, folks, you can't really believe what China puts out. It's quite known fact that a lot of their data is probably faked. So I'm hearing other things. I'm hearing a lot of things about the Chinese economy not being very strong. It seems they're going through a banking crisis. As expected, their version of 2008, where we've seen 3 banks be bailed out in 3 months. So that adds a lot more too, because a lot of copper back here was buoyed by the China growth story, right? So very interesting things to watch here for copper. Again, higher low, higher high, higher low, higher high, and we're waiting for a first lower high, lower low. But copper could also be a sign, as I said, that we are going to be seeing a global slowdown / recession. And if you follow my work, you realize why there'll be trouble with this recession, because it seems central banks are running out of options. They're cutting interest rates low. I know Jim Rickards talks about the Fed generally for America to get out of a recession, they have to cut points by 400 basis points, the interest rates by 400 basis points, which is 4%. But how can you do that when you're at 2.25? So that's an issue. And the quantitative tightening. So has the Fed been selling off their balance sheet? We've heard that their balance sheet ballooned from 800 billion to 4.2 trillion during the 4 rounds of QE. And they've said they've been doing quantitative tightening, but they're ending it a month earlier. So they're ending it at the end of this month. And it's assumed that their balance sheet is still around 3.8 trillion. So they haven't really sold much of what they said they were going to sell. Which begs the question, if they go back into QE to support markets, what more can they do? How much more can they balloon their balance sheets? Yes, they can. I think the ECB and the Bank of Japan are at around 5 trillion. So there is room up to the upside. But again, this is the Fed, the Federal Reserve. And this is where it becomes a confidence crisis, right? Will people believe what the Fed is saying when they balloon their balance sheet up to 5 trillion, 6 trillion? It's really a confidence game. No one knows that number, where people are going to realize that QE is now the norm. It's not this one-off policy to prevent a 1920s and 30s global depression. it is actually the norm, and central bankers have to continue this. So again, sort of went off the trail there talking about central banks and stuff, but I believe this chart here in copper is something you should definitely watch, as it's also another confluence, another sign, adding more probability to this fact that a recession is coming. Again, we're seeing signs everywhere, and this just adds one more sign. Again, folks, I've talked a lot about things such as gold, things such as silver, even Bitcoin for a bit. But again, if you follow my work, I believe Bitcoin is great, but there's going to be a time where you want to sell to put into hard assets, just because a lot of these Bitcoin, these Bitcoin exchanges, they're not really regulated. Well, they aren't regulated. There's no regulations, right? So if Bitcoin goes to say 50K or 100K or whatever, and all these people go out to take their profits, a lot of these exchanges won't have the money to do so, and that's okay because they aren't regulated, so they don't need to. So your profits really won't mean anything. And I always get the people saying, oh no, but fiat is dying, you don't need to go into fiat. The only problem is, yeah, fiat will, I believe, and it is dying, but as long as governments mandate that taxes be paid with fiat money rather than gold, rather than silver, rather than Bitcoin, there will be that demand for fiat or whatever currency the government comes up with next, right? That's unless you want to go to jail, right? Don't pay taxes and go to jail. So you will have to take profits. So all these people who keep talking about hodling and stuff, you have to realize that. And again, there might be an incident where you're trying to take profits and you won't be able to because there's no regulation. So again, we are seeing this reset. Bitcoin, again, I believe is more a China play, as I've outlined before, but I'm very bullish on gold, very bullish, especially on silver. This week they're reaching very important weekly levels, so it'll be interesting to see what they do here. But again, I'm not expecting this just to continue to go up forever, because these things move in pullbacks and stuff. But this is very, if you look at where we are geopolitically and economically, very bright spot, or a bright future for gold and silver in the long term. And let's just do a quick rundown here on gold versus all these other fiat currency. So again, against the euro, not quite there yet, not at all-time highs yet. Against the pound, all-time highs. Against the yen, all-time highs against the Japanese yen last week. All-time highs against the Canadian dollar. All-time highs against the Aussie dollar. And all-time highs on the Kiwi. Well, it didn't close above all-time highs. Well, actually, I did. Yeah, it closed here, but you can see here the wick did hit these all-time previous highs here. We had a body close over these highs here, so not yet, but almost there. But this is telling us that fiat is dying. So this is something you should definitely look at. And again, I think it stems from the fact that people have realized that these central banks are now devaluing their money, devaluing their currency, and there's that big race to the bottom. When New Zealand came out with 50 basis point cuts, I think people were surprised, because perhaps there was some sort of collusion or agreement with central banks saying, hey, why don't we come down slowly at 25 just to keep the confidence in the system. And the Bank of New Zealand brought it down 50, and I think you're going to see this speed up. President Trump himself called for a 1% cut to interest rates, and he still touts saying that this is the strongest economy ever. It's so strong that we have to cut interest rates. For those that don't know, generally, typical economics, you learn when the economy is booming, you actually hike interest rates because you're trying to slow things down. When the economy is very slow, you cut interest rates to try to make access to capital and credit, much cheaper. So very interesting times, as I said. Let's look at this copper chart, look at some of the weekly charts. Again, a lot of these big institution funds, they trade off the weekly chart, so there's always interesting to see the movements on the weekly charts. But that's it for me. If you like the video, please give it a like. If you aren't following my channel, please give my channel a follow as well, and I will talk to you guys later.